Welcome back now to our first conversation. Yesterday, Afrinvest Consulting Limited published its brewery sector update for 2021 titled Potential in a Constrained Market. According to the report, the Nigerian brewery industry revenue, proxied by revenue of Nigerian Breweries PLC, Guinness Nigeria and International Breweries PLC rose by 34.9% year-on-year to 780 billion naira, despite the myriad of challenges in the business environment. Well, let's get more now with Damilaria Shimiyu, macro strategist with Afrinvest Consulting Limited, join us on the show this morning. Great to have you. Good morning.
Good morning. Thanks for having me on the show.
Nice. Well, how would you rate the general performance, of the Nigerian brewery industry in 2021?
Yeah, thank you. So looking at the business environment in Nigeria, as well as the constraints that consumers have been facing in terms of high inflation, which has continued to pressure their wallets, you quite agree with me that the performance of the industry sector in 2021 is quite appreciable, is commendable in the fact that revenue grew by 34.9%. I mean, for the proxy brewers, the three brewers that we use as proxy for the industry, Nigerian breweries, Guinness, and international breweries. And it is also quite interesting to note that the revenue jump last year is the highest in the decade at 34.9. Another interesting thing to also note is the fact that last 2021 performance happens to be the first time the industry revenue will increase or grow in real time since 2018. And also the last time that the three brewers recorded growth in their revenue was even in 2017. So what made 2018 is actually a peculiar year because that was the year AB InBev, the parent company of International Breweries, completed a major acquisition transaction with Parbod and Interfact. So basically, the growth we saw in the revenue of brewer in 2018 was mostly driven by that, because by that development, the revenue of international breweries more than doubled. But if you look at other players separately in that 2018, revenue was actually down. So the last time all players in the industry had their revenue increase was actually 2017. So this is the first time all industry players have their revenue increase since 2017. Nigerian breweries grew revenue last year by 29%. Guinness being the fastest at 53%, while international breweries did 3.3%. So it's commendable that despite the tough business environment from both the supply and the demand end, brewers were able to improve the volume through product innovation, as well as a modest price increase. But last year, the brewers had to come out of their shell to make price adjustments, because for many years they've been struggling to pass down the high cost of operation onto consumers in that they've kept prices unchanged. But last year we saw some modest price increases on some strategic brand, which also helped the performance. But by and large, we should commend the brewers because they were able to improve on their sales strategy, and all the players were able to grow their revenue in double digits.
Quite interesting, but can you see them sustaining this performance?
Yeah, so Nigerian brewers have developed a very thick skin for the challenges in the market. So there are a lot of challenges that are actually beyond their control. We have, which are termed as external factors. There's a problem of power there, which is continue to weigh on their production. Many of them rely solely on diesel to power their production process. There's problem of logistics for the commodities they import. There's a problem of multiple tax. So when I was talking the other time, I said 2018 is a peculiar year in that the last time these brewers all had increases in their revenue was 2017. Now, the increase in revenue in 2018 was just because of the merger of international breweries. So in 2018, the federal government replaced the ad valorem tax on alcohol, spirit, and spirit drink and wine, of 20 kobo per CL with a gradual scale up of excise charge on those commodities, which as of last year, excise charge per liter on alcohol was 40 kobo, on spirit was 1 naira 50 kobo per CL, on wine was 2 naira. So invariably, that policy alone drove an average of 20% increase in cost of production per unit of these commodities. And interestingly, alcoholic products or alcoholic products account for more than 70% of revenue of these brewers. So it was a major pressure point that these guys had to deal with. But even with this pressure point, and also with the addition of the value-added tax, increase in value-added tax in 2020 to 7.5, the brewers were able to improve their top line in terms by improving their marketing strategy, by also coming up with a lot of product innovation to meet consumer tastes, because they're in a very sensitive industry. The commodity they sell is actually is classified as consumer discretionary. So consumers are very sensitive, and the brewers have demonstrated the capacity to be able to move in line with consumers' changing taste and offer them what they want at the best price possible. So given their resilience over the years, I think the brewers will do everything within their reach in terms of product innovation, in terms of aggressive marketing, in terms of repackaging products to meeting consumer demand, to sustain this positive performance. Though we don't expect the performance in 2020 to be as strong as 2021, because 2021, the price was actually coming from a very low base in 2020. Industry revenue declined by 1.5% in 2020 due to lockdown measures that was taken in major states like Lagos, Abuja, Port Harcourt at the peak of the pandemic. But following the reopening of the economy in Q4, so brewers are able to improve on their sales. And we also observed that brewers also devised new means of reaching their consumers, even in the comfort of their home. They also partner with a lot of online stores to deliver their products. So we think brewers will continue to innovate ways to get their products to final consumers and deliver good value. So yes, we see them as sustaining business despite all the pressures.
Right, and we've seen most of them, come up with new flavors, to attract new customers. But looking at the theme of the report, potential in a constrained market, can you shed more light on the potential of the sector, with constraints to optimizing it and how to unlock that value?
So looking at the Nigerian market, right, as of 2019, when the NBS last released the demographic data on Nigeria, we have more than 206 million population in Nigeria. And if we pick 21 years as the least, these brewers produce both aqua and non-alcoholic drinks, so we need to establish that. But even if we're looking at their product as strictly alcoholic commodity, we have more than 40% of Nigerians in the beer consuming, a legally acceptable beer consuming age of 21 and above. So which gives us a market size of above 100 million in Nigeria. So meaning that in terms of potential market size, the Nigeria market for brewers is bigger than the combined of other West African countries. And if you also look at it in terms of Nigeria's GDP, Nigeria happens to be the #1 economy in Africa in terms of GDP, at about $514 billion according to the IMF. So these are figures and numbers that provide a compelling case for brewers to want to play in this kind of market. But the constraint there is that producers are unable to optimize this potential of a large market, optimize the potential of an economy which is the biggest in Africa, in that there are both supply and demand side challenges. Supply side challenges ranging from FX problem. We all can attest to the pressure point on our exchange rates in the last 5 years. Exchange rate has more than devalued by 35%. So these do significantly affect brewers because they are exposed to a lot of importation. We have problem of power, like I already mentioned. We have problem of logistics. And also there are problem of multiple taxation. I talked about the excise charge that the FG began in 2018, which replaced the honorarium tax, which added on average about 20% cost of per bottle of beer products. And also we have other challenges, from the demand side. Consumers' wallets remains pressured due to elevated inflation. And there is also stiff competition in the industry, both from former industry players as well as unregulated cheaper alternatives, which is contending the low-end market segment with this major brewer. So basically, those are the constraints that has made it difficult for brewers in Nigeria to fully optimize this large market size. Because it's quite interesting that South Africa, a population of about 60 million, has a market size, potential market size of about 32 million, which is less than 1/3 of the potential size of the Nigerian market. Whereas brewers in South Africa are doing a much stronger number in terms of revenue and profitability relative to Nigeria market. So these are the constraints that brewers are facing in a market that has a potential to deliver optimally for them.
In the sugar tax and ban on alcohol in sachets and small volume PET bottles, but what does the future hold for brewers' revenue performance in Nigeria?
Yeah, so speaking to the sugar tax first, so if you look at this sugar tax impact on brewers' cost, it looks a bit very tiny, because a sugar tax of 10 naira per liter means that you have to take about 3 can bottles of a non-alcoholic drink to pay an extra cost of 10 naira. So invariably, the sugar tax is actually just bringing about 1.4% to average cost of producing non-alcoholic beverage. But given the fact that there are already pressure points on the cost line of brewers, I mentioned that the alcohol, the excise charge on alcohol is adding about 20% to the cost of producing every bottle that you see. And also there is an increase in value-added tax. So if you combine the 1.4 that is coming from the sugar tax, it means that the cost line of brewers will be pressured. And I can tell you that last year, cost of production or cost of sales of brewers last year rose by about 33%, nearly offsetting the industry cost of sales rising by 33.3%, nearly offsetting the gains in terms of the rising revenue. So when a policy like the new sugar tax, or what the government tag as sin tax, adds to the cost pressure, you agree with me that it will reduce the margins of brewers, because, and again, they may not be able to fully pass all this cost to consumer. Though we've seen some price adjustment recently, but those many of that have been done good. So we think that the new sugar tax add to the cost line, had pressure on the cost line, reduce margin, and the ban on sachet alcohol, right, will take away the low-end market segment from the regulated brewers, because this is a market that is serving mostly low-end markets, estimated to be about 42 million. So the ban on them will affect about 5 to 10% profit of brewers, though we expect that brewers will continue to be aggressive in their marketing to deliver quality products, to bring some of the low-end markets to the economy of premium stage of their product. But this will actually affect the revenue slightly in the coming years.
Yeah, those sachets were quite abused, by a lot of people. Well, you estimated the capacity utilization of the Nigerian brewery industry at 43.1% in 2021, compared to a 60% uptake for the brewery industry in South Africa. What would you suggest industry players, to do to improve capacity utilization?
Yeah, so given the nature of the business, it is the product basically is more of consumer discretionary, and the performance of the industry responds strictly to consumers' willingness to purchase. So I think what brewers just need to do is to improve investment in research and development, to be able to provide the products in a way that will suit consumer demand. We saw some last year. We saw Guinness rolling out his Guinness Smooth Extra, in can. All these are just to deliver what consumer wants. So long brewers are trying, because that's what they can control. They can't control inflation. They can't control the impact of exchange rate on them, and they can also not control what consumer want. But you can study consumer taste and produce towards meeting their taste. So long brewers continue to invest in research and development and to meeting consumer taste, I believe that it will help their performance going forward.
Right. I guess the brewers have, quite a lot, to do there to, continue and maintain this upsurge in revenue. Thank you so much, Damilare Ashimi, macro strategist, Afrinvest Consulting Limited. It was great having you on the show today.
Thanks for having me.
All right, now, so commodities market update is next after the break. Do stay with us. This is Business Morning.